Shivananda Sharma Memorial RV College video lecture. This is an ISR initiative. SSMRV College, one of the premier institutes run by the prestigious RV group of institutions, has come up with a unique initiative to engage students at the time of this unforeseen medical emergency caused by corona outbreak. As a socially responsible institution, we would like to connect academically with students to make good the losses caused. In this connection, I, Shobha BG of Department of Commerce, has posted a video on the subject Banking Operations and Innovations, and the topic covered is Types of Lending. Please watch the video till the end and like, share with your peer groups and subscribe to our YouTube channel. Thank you. In the previous video, we discussed about the lending operations and the basic principles that the bankers has to follow to lend the money. This video will be discussing about the types of lending or types of credit facilities, which includes fund-based credit facilities and non-fund-based credit facilities. Types of lending or the types of credit facilities are of two kinds. Those will be classified as A. Fund-based credit facilities, B. Non-fund-based credit facilities. As we all know that bank finance is tailor-made to suit the needs of the customers, the loans and advances wherein immediate flow of funds available to the borrowers are called fund-based facility, and the bankers earn interest for this service. Whereas in a non-fund-based facilities, there is no immediate outflow of the fund, but the bankers are going to provide a kind of guarantee or a letter of credit on behalf of the customers. Now let us discuss in detail what are these fund-based credit facilities. So under this fund-based credit facilities, there are three types. One is cash credits or the overdraft. Then second one is a demand loans, or you can call it as a term loan, and third one is a bill finance. Let us discuss about the cash credit facility which is offered to the customer. So under the cash credit facility, the customers are going to open a new account which is called as a cash credit account, and they are going to specify a limit to what extent the customers are allowed to get the loan, and the borrowers can withdraw the amount in installments as and when they require it, and the amount is the interest is going to charge only on the actual amount withdrawn but not the total amount sanctioned. So here sometimes if the customers or the borrowers are not going to withdraw the complete amount, then the bankers are going to incur a loss because of the unutilized portion, for which the bankers are going to charge a commitment charges. Overdrafts are the another kind of credit facility which is given to the customer. Usually it is offered to the customer who has a current account in the bank. So what is this overdraft? So under the overdraft facility, the customers are allowed to overdraw their account to a certain limit. For example, if a customer has a 1 lakh in their current account, so the customer may be permitted to draw more than 1 lakh rupees. Assume it like 1,50,000. So that 50,000 extra overdraft facility will be given to the customer. But this is a temporary financial arrangement, and it is only for the short period, and at the end of the year the borrower or the customer has to bring back the current account to its credit balance. The second category is demand loans or the term loans. So under this category, as the name itself says, it is a term loans. So there are different terms for which the loans are going to be sanctioned. For example, there is a short term loan, medium term loan and the long term loan. If the loan is sanctioned for 1 year or less than 1 year, we call it as a short term loan, and if it is for a period of 2 or more years, we call it as a medium term loan, and if it is more than 5 years, we call it as a long term loan. So usually these term loans are sanctioned against a collateral security or the personal security, and the interest charged will be for the entire amount sanctioned, but not on the amount that the borrower has withdrawn it. Next category is a bills of exchange. So here, if the customer has a bills of exchange and if they are in immediate need of the money, that bills of exchange can be produced to the bank and immediate cash can be withdrawn. But for this service, the bankers are going to deduct some amount from the bill's value, which is called as a discounting charges. And later, the face value of the bill is going to be taken from the acceptor of the bill. In case bill is not honored by the acceptor, then money is going to be recovered from the customer himself. In the previous slides, we discussed about the fund-based credit facilities, where we discussed cash credit, overdraft, bills finance, and term loans. So now let us discuss the differences between the overdraft facility and the credit facilities. So I have taken the 5 grounds on basis of which we can differentiate. First one is the type of account the customer need to open or the borrower need to open. So in case of overdraft facility, the facility is given to the current account holder itself. But in case of cash credit, it will be granted to any customer. Even if they don't have an account, it can be provided. Then coming to the second difference, it is granted on the existing current account itself and there is no need of opening a new account. But in case of cash credit facility, a customer need to open a new account, which is called as a cash credit account. Then coming to the third difference, the overdraft facility is only a temporary financial arrangement, because at the end of the year, again the customer has to bring back their account balance, means the current account balance has to be brought back and overdraft amount has to be returned. But in case of the cash credit, it is a permanent financial arrangement given to the customer. Then coming to the on the basis of the interest, the rate of interest charged is higher than the rate of interest which is charged to the cash credit. Whereas in case of cash credit, the rate of interest charges is lesser compared to the overdraft facility. Then coming to the last difference, usually overdraft facility is given only against the tangible security or the personal security of the borrower. But in case of cash credit facility, there will be the security like pledge or hypothecation of the tangible assets. The another kind of credit facilities which is offered by the banker is the non-fund based credit facilities. So as the name itself says, it is not based on the fund. There is no immediate outflow of the cash from the banker, but it is a kind of guarantee which is given by the banker to the customer. So under this category, we will be discussing about the letter of credit. The letter of credit assumes a great importance in the international trade. The problem in the foreign trade is that the exporter and the importers are separated by the distance and they will not be knowing each other. So the exporter will send the goods only if he is satisfied with the credit worthiness of the importer. So this is what will be a hindrance to the foreign trade. So this problem of the foreign trade is overcome by getting the letter of credit. So the letter of credit assures a payment to the exporter soon after he parts with the goods and enable the importer to make a payment only after he receives the goods or the document of title to the goods. So the letter of credit facilitates the foreign trade. The same thing the definition says. A letter of credit is defined as a letter which is issued by the importer bank in favor of the exporter, authorizing him to draw the bill for the amount specified in it and assuring him the payment against the delivery of the prescribed documents in his own country. So here the issuing bank are going to collect a specimen signature of the customer and that will be sent to the corresponding bank. Corresponding bank means the bank which is situated in the another country. And here the guarantee given in the letter of credit, to that extent the amount will be debited to the customer account, that is by the corresponding bank. In case if the letter of credit is produced to only one bank or one corresponding bank, we call it as a direct letter of credit. But sometimes the letter of credit can be addressed to more than one correspondent bank, which we call it as a circular letter of credit. There are different kinds of letters of credit. So let us discuss those classification. First one is documentary and clean letters of credit. So let us take the documentary letter of credit. So if a letter of credit is issued on a condition that it has to accompany with a relevant shipping documents like bill of lading, marine insurance, invoice, we call it as a documentary letter of credit. So in case if there is no condition that these documents are to be attached or without insisting on the relevant shipping document, we call it as a clean letter of credit. The next classification is on the basis of the cancelling authority. There are two types, revocable and irrevocable letter of credit. So in case of revocable letter of credit, the banker has a right that any time they can cancel it without taking a prior permission from the parties who are connected with the trade. But this kind of letter of credits are risky from the point of view of the exporter. The next classification is irrevocable letter of credit. So under this, the banker cannot cancel it, means issuing banker cannot cancel the letter of credit unless they take a permission from the parties who are connected with the trade. Next classification is confirmed and unconfirmed letters of credit. So in case of confirmed letter of credit, the negotiating bank as well as the issuing bank are going to undertake to honor the bill drawn by the exporter. But in case of unconfirmed letter of credit, which will not contain an undertaking of the negotiating bank in the exporter's country to honor the bill. So the difference is, in case of confirmed letter of credit, along with the issuing bank, the negotiating bank also undertake to honor the bill. But in case of unconfirmed letter of credit, the negotiating bank will not take an undertaking to honor the bill. The next category is fixed and revolving letters of credit. If a letter of credit is issued for a fixed amount and for a fixed period, we call it as a fixed letter of credit. In case if the amount of credit allowed in the letter of credit is automatically going to renew, maybe the amount or the date, we call it as the revolving letters of credit. The last classification is with recourse and without recourse letters of credit. If the paying bank can turn back to the drawer of the bill, the exporter for the payment in the event of default on the part of the importer to honor the bill, then it is called as with a recourse letter of credit. In case if the paying banker cannot turn back to the exporter for the payment in the event of dishonor of the bill by the importer, then it is called a without recourse letter of credit. To conclude, the topics that we have discussed in this video are the fund-based credit facilities and the non-fund-based credit facilities. Under the fund-based category, we discussed what is the cash credit, then what is overdraft, then we discussed about the term loans and also the bills finance. Then coming to the non-fund-based credit category, we discussed about the letter of credits and its classification. I hope all of you understood the content discussed in this video. And in this unit, that is in the lending operations, the topics to be discussed are the types of securities or modes of creating a charges over the securities and the non-performing assets, which will be covered in the upcoming videos. Thank you for watching the video.